If you take out a mortgage or a loan, the bank does not lend you somebody else's savings. They simply type the amount into your account. That money didn't exist before. They've just created it. This is confirmed by the Bank of England. Most of the money in our economy, 90% of it, is created this way. Historically, the power to create money was tightly linked to the state. It was only kings or parliaments or governments that could do it, and money was used to fund public good. Roads, ports, hospitals. Money was created through spending, through taxation, and through coinage. And it was considered a very serious constitutional power, like raising an army or setting laws. When governments create money, they're answerable to voters, or at least parliaments. And so there's a direct link between who pays and what gets funded and who benefits. That is the basic democratic idea, that we all contribute tax and then that's used to fund our collective needs. In the 20th century, this changed. This is not how our world works anymore. Now, money is created when a bank issues a loan, not to governments, but to whoever is profitable. This usually means property developers, private equity firms, and high-income individuals buying assets. For example, despite Elon's net worth, he purchased Twitter with loans. That means the ability to print money sits with rich people, and they are not accountable to anybody other than other shareholders. Banking is structurally corrupt. The banks create money through lending, which is a public power that has been delegated to private institutions. They use that power not to serve the people, but to expand the credit of the already wealthy, real estate, financial markets, corporate buybacks. Banks know in advance what central banks and governments will do because they have access privileges, and they position themselves accordingly, legally, unlawfully, and manipulatively, profiting from a rigged game where the ones with the money decide the monetary policies. They now believe they've become too big to fail and are very confident gambling with public backing. Even if corruption is found out, the fines were already priced into the operating costs, and executives usually walk away free. The ideology of banking trains these professionals to think in terms of risk, efficiency, compliance, never justice or equity or real-world consequence. Regulatory compliance is a performance, not a constraint. And banking isn't just about intermediation. It's about charging tolls on access to credit, which creates a state dependency on the banking system. But creditworthiness is coded by existing financial power and racial bias, which is preserving a dangerous historical inequality. Banking under capitalism is institutional architecture designed to concentrate wealth. They have normalized their privilege while outsourcing any real risk to the public. For all of their talk about compliance and risk, there is no risk in banking because the government will bail you out when you fuck it up. Banks are supposed to be regulated, but in reality, they, via lobbying, help write the rules of their own regulation. And they meet quietly in places like the Bank of International Settlements, which is not accountable to any parliament. This is the structural problem that drives inequality, that's creating a housing crisis, weakening democracy, denying you of your basic needs and sending us all to war. It's the banks.